Hey, how's it going, guys? In this video, we're going to be going over risk management. Okay, so what is risk management? Well, let's get the exact definition. The definition of risk management is the forecasting and evaluation of financial risk together with the identification of procedures to avoid or minimize that impact. Basically, just having a plan before you invest. The second definition is the process of identification, analysis, and acceptance or mitigation of an uncertainty in investment decisions. Essentially, risk management occurs anytime an investor or fund manager analyzes and attempts to quantify the potential for losses in an investment and then takes the appropriate action or inaction given his investment objectives and risk tolerance. Okay, so it just means controlling yourself, guys, in each investment you do, not just in trading, but every investment you're going to make in your life, which I suggest you start becoming an investor in other things besides trading. Also, you plan and you try to minimize the risk on your capital. Okay, that's pretty much all it means. It's just being very careful, planning out your investment, not rushing in, and realizing that it can go belly up. You know what I mean? Or it can go good, or it can go belly up, and you got to plan for both. Okay. So you got to be positive. You always got to be optimistic, but always plan for when things don't go your way. And you know what I mean? The world, that's how life works, right? Not everything goes your way. Okay, so risk tolerance. What is risk tolerance? Risk tolerance is the degree of variability in an investment returns that an investor is willing to withstand. Okay, so what does that mean? You can either be a conservative or moderate or an aggressive. You can have moderate risk tolerance, conservative risk tolerance, or aggressive risk tolerance. Okay, I'm more of a conservative. I always risk 5% or less on a trade. I like to actually sit near the 1 to 3%, obviously, right? But for those really, really good trades, I'll go hard and I'll do moderate, right? I'll do more than 6%. Basically, it's just to control myself, guys. It's not that some trades are going to be right, some trades are going to be wrong. You just got to protect your account. I mean, it's basically very simple. If you want to be aggressive, obviously 10% or more this is my personal opinion. This info is not from any website or anything. These are my numbers, okay, that I put. To be conservative, in my opinion, is 5% or less of your account. I know people that are very, very conservative and they make good money, but they have big accounts. If you have a smaller account, obviously you gotta weigh your options, right? If you want to take it chill or you want to go a little bit more aggressive, okay? Okay, so here we have a painting, right, of it's that Chinese painting with a wave or whatever. We have the 1618 spiral in there, Fibonacci, right? Basically, I just put this picture in because just showing you that basically the market's like a big ocean, and you got to protect yourself. You know what I mean? And there's just so much money being moved that your account, in the grand scheme of things, is like a little water droplet. Okay, so you got to protect yourself. You got to protect your account. Okay. Next slide. Okay, what risk percentage am I comfortable with? Okay, every single trader has a different risk tolerance, some more than others. Okay, the most conservative traders use less than 1% risk. My recommendation for everyone is 3% or less. Okay, I commonly use 3 to 5% risk per trade. Okay, so how do we calculate our risk? Okay, when you calculate your risk, it's going to be in a percentage. Okay, so all you do is ask yourself is this: what percentage of my total account balance would be lost if my stop loss gets hit? Okay, very simple. If my stop loss gets hit, how much percentage of my total account balance will I lose? Okay, if my stop loss gets hit, that's your risk. Okay, that's your risk percentage. So let's say, I'm just going to give you guys examples so you guys can base your own account off of your own trades. Okay, so using a 20 pip stop loss on a $1,000 account, 1% risk is a 0.5, right? 3% risk is a 0.15. 5% risk is a quarter, right? 0.25. 10% risk. How much is 10% of $1,000? $100, right? So that's a half lot with a 20 pip stop loss. Okay, if it gets hit, we're gonna lose $100, right? 10% risk. 20% risk, 1 lot. What does that mean? If we put a 1 lot in on a $1,000 account, we have a 20 pip stop loss, it gets hit, we're going to lose 20% of the account. Okay, so I'm basing all my lot sizing off this. Okay, how much risk am I going to take on my account, total account balance? Okay, and every stop losses also vary, so you have to be very, very careful picking your lot size. Okay, okay, so yeah, 20% risk on a $2,000 account is going to be $400, right? If you're going to risk $400 using a 20 pip stop loss, the maximum you can put is a 2 lot. Okay. It's very simple, guys. Very simple math. If you're having trouble, just pause and just go through each one and just see where your account's at. If your account's below 1,000, then just half the lot size that I put in the first slide, right? Okay, so let's go to the next one. If we have a $4,000 account using a 20 pip stop loss, our 1% risk will be a 0.20, 3% risk will be 0.6, 5% risk will be 1 lot, 10% 2 lot, and 20% 4 lots. Okay, very simple, guys. Once again, the math is not that hard. If you're having trouble with your lot size and risk percentage and you don't know what's going on, you don't know the math, you don't want to do it, just go on Google and type in Forex. I think it's risk percentage or lot size. It's something on a website. I think it's Baby Pips. It's on babypips.com. Yeah, go on babypips.com and then there'll be a risk calculator there, and you can plug in your account balance, your stop loss, what pair you're on, and it'll tell you what lot size to use and everything. So that's on Baby Pips. Just Google that. So why are we so careful with our risk management, okay, when we're trading? Well, the reason is this. You know, trading the market, you got to have, it's like walking on a tightrope, right? If you're using conservative risk management, it'll be like a whole bridge, right, across 2 buildings. Instead of walking on a nice tightrope, right, you don't have any room to move on both sides. If you're using conservative risk management, you can have a nice bridge, right? You have room for error, all right, when you're walking across the two buildings, right? You have room for error. When you're using super high risk, like super aggressive, you know, it's getting smaller and smaller. That bridge is getting smaller and smaller. You have less room for error. So if the market spikes against you, your account's probably going to be blown, right? Even if you're using a stop loss, you're going to take a big chunk out of your account. Okay, so that's what I mean. You want to have a nice big bridge. Okay, you don't want to be walking on this skinny tightrope. Okay, that's why you got to use risk management on your account. Okay, so let's actually go to some examples of trades I actually took, and I'll show you my risk management and my strategies and all that. Okay, so next slide. Okay, here we have EURJPY. Basically, I took this trade off the 61.8 Fibonacci, right? We're in an uptrend. I was expecting a trend continuation. Here, hold on. Let me put on draw shapes, line. Okay, so if you notice right away, my stop loss was 25 pips. Okay, 26 pips, right? Round it up. 25, 26 pips. Okay. Using conservative risk management, that's a very nice stop loss, right? 25 pips. It's below structure. Notice where I put it. Below structure. All right. I put it below structure. I'm always going to look left. I'm going to look towards the lows and see, okay, well, I can put it below structure here. I know if it breaks, it's most likely going to keep going, okay? This is a very tight stop loss. Based on the setup, right, we had a nice 61.8 tap. I was expecting a trend continuation. If you want to go a little bit more advanced, we have a counter trend line break right here. And we have the retest on the 61.8 right there. Okay. That's where I took the trade off of. Basically, I was just waiting. I was going to see if it was going to do a double bottom, right? On the 1 hour chart, you get a lot of more double bottom type structures. So basically, I took it off to 61.8. What I want you to pay attention is not the trade itself, but the actual risk management. Look how my stop loss is, all right? It's a very nice tight stop loss, right below structure. I was watching the trade. If it even started to get near the 61.8 again, I was going to close the trade, right? That's just smart risk management. If it was going to break this low, right, the 61.8 that it tapped, then most likely it was going to go to the 70.86, right? So I was going to have to get out before it hits my stop loss, right? Makes sense? So just showing you very tight stop loss. This was like less than 5% risk on my account. And let's see what happened. Boom. All right, price spiked up immediately after. Almost pretty much no drawdown on that 1 hour chart, right? Very little drawdown. Notice right away, I didn't actually show the stop loss being moved here, obviously, because trading view you can't move it up past it. But I moved my stop loss to the next structure. Once price spiked and I'm in profit, right away, I'm going to move my stop loss up. All right. So that's smart risk management. Okay, I'm going to look for structure, and I'm going to put it right under structure. Right, get the idea right there. Boom. Okay, that's just one example of where I could move my stop loss. Past break even, all right? So that means I'm taking zero risk on my trade, all right? It's in profit. I'm going to move my stop loss past break even. I'm in no risk now, okay? Next slide. Boom, target gets hit. Full extension, 94 pips. Once again, notice where price spiked back down into. You see how price spiked up? All these big candles usually get retraced, guys. So when you have these quick spikes on the 1 hour chart, usually they get retraced, right? So I had my stop loss past break even right here. And look what happened. Price came back, retested structure, right? It broke this high. Previous structure, come back to retest, okay? Very simple, but you see, if you're using smart stop loss placement, you didn't get taken out, you see? And you would have gotten your targets hit right here, boom. It actually went past targets before it closed the candle, right? So I'm just showing you guys, like, you have to be very, very smart with your stop loss placement. Always try to keep it tight. Always use risk management, okay? Lot size and all that. You know, don't get faked out by social media. You know, everyone throwing big lot sizes, they probably don't know how much, like, they're just risking a lot of money basically on each trade. You're in this for the long haul, guys. Build up your count. Don't worry. The big trades will come. Just keep ramping up your lot size, ramping up your risk as you get better and better at trading, okay? The market's going to be here, no rush. All right, next slide. Okay, so this is a USDJPY trade I took. Notice right away, like, I don't care about the trade, guys. This is not what I'm showing you the trades for. I'm showing you the stop loss placement, okay? Stop loss below the low of where I took a trade off of, right? See where I put the stop loss? Below the low. Way below the low, right? A little bit below the low. Like, a few pips, maybe like 5-10 pips below the low, right? 36 pip stop loss. Okay, I took the trade. All right, whatever my confluences were, they're there. I took the trade. I'm expecting long continuation, right? Bullish continuation trade. Okay, what do we see? Okay, 36 pip stop loss. My entry was right there. Just want you to show you. Boom. Trade's about to get hit. Take profit's about to get hit, right? But let's go back to our stop loss placement. It was below the low right here. See, proper stop loss placement. What happened? We had a double bottom, but it made a higher low. My stop loss got missed. All right, they tried to take people out. You were protected by structure, made a higher low, takes off. Boom. All right, you're in profit. Perfect. Now you move your stop loss to break even, right? If your entry was there, as soon as you start going into profit, I say maybe like, I would like to say like 40 pips, right? When you're in profit, 40 pips, or maybe a little bit less. Start moving your stop loss up to break even. Just, you know, just minimize your risk, guys. Always be very, very, very careful with your stop loss placement. If I was going to move my stop loss past break even right here, I'd probably put it right here. All right, just below this trend line, and a little bit below this structure right here, this previous high, right there. All right, so price did a nice symmetrical triangle right here. Right, if the trend line was like this, did a nice symmetrical triangle, and then we get the breakout, boom, to the upside. And target gets hit. We hit our quarter point, we're out. All right, very simple. Just very, very simple, guys. I just want you to notice that my stop losses are very, very tight, but they're in proper positions, okay? You have to be very, very careful where you place it, all right? Always use structure. Always below structure. If you're buying, always put it below the low, right? If you're selling, above the high. But also just look left, you know, zoom out, look left, and you'll be able to see structure, all right, where you can put your stop loss to keep it safe. Because invariably you're going to go into drawdown and the market needs room to breathe sometimes, you know what I mean? So your trades sometimes don't go instantly into profit, like that EURJPY trade. That one just went right into profit. Well, this one took a little while, okay? So that's why your stop loss and your risk management comes into play. All right, next slide. The market is fluid, so must you be. Okay, so adjust your lot size depending on the pair as well, but always keep risk management in mind. Some trade setups are better than others, so depending on your risk tolerance, you can always be more aggressive. And what do I mean by that? Well, there's some trade setups, guys, that it's like you can see it across the room. You know what I mean? Like you've been waiting a week or 2 weeks for this trade setup, and it's setting up like beautifully, like exactly how you want it to. Everything's lining up. You got multiple confluences. You pull the trigger. You can be a little bit more aggressive. You know what I mean? You can be a little bit more aggressive. You just have to watch your stop loss placement, and then as soon as your trade goes into profit, a good amount, start ghosting that stop loss. You know what I mean? Start ghosting it closer and closer to your entry. Make it risk free, and then once it's risk free, just let it run. Always manage it, of course. Like if you're up 100 pips, you better secure some pips and move it past, 25 pips above your stop loss, like above break even. You know what I mean? Secure some pips, and yeah, just be very smart. It just comes natural, guys. Once you understand your lot size and all that, and over time you'll get used to it. Don't worry about that. Depending on your style of trading, you will need to adjust your risk. Okay, so scalpers are usually high risk, but quickly enter and exit positions. Intraday traders can have moderate or more conservative risk tolerance. Medium swing to long-term traders are usually the most conservative traders. Okay, why? Because they're holding trades for a long time. They don't want to have that stress of like, is my account going to blow or not? You know what I mean? So you just put a super low volume in. You just let it run. See if it hits take profit. Try to bag 200 pips or whatever. Next slide. So going back to our risk tolerance, once again, I'm a conservative trader. I try to do 5% or less risk per trade. On some trade setups, I go a little bit more aggressive, but I'm always watching my stop loss, and I always try to keep it very, very low. All right, try to keep my risk as low as possible, while at the same time being aggressive. You know what I mean? Moderate risk tolerance 6 to 9%. Aggressive risk tolerance 10% or up. That's just my figures, guys. You can decide what am I gonna be more conservative this week, or am I going to be a little bit more, aggressive? You just alter your risk tolerance. Okay, so the market is, once again, go back to the sea analogy. The market is a storm as well. So if you want to protect yourself from the storm, you have to use risk management, guys. Okay, the market is a storm. It's relentless. It's calm. Consolidation, right? Consolidation. The clouds roll in. The market starts swinging back and forth. The thunder's starting to get going, and then boom, you get a nice tornado out of there. You get the huge trend move, and then boom, you get back to consolidation. The market, the clouds just come in once again, just like a big storm. You know what I mean? So sometimes the storm is quiet and sometimes it's loud, and you got to protect yourself for both. Okay, so when the market's consolidating, that's why you got to use your risk management, because I know, like, if you get in a trade and it consolidates and you're using high risk, most likely you're going to get taken out. Okay, so you got to be very, very careful. Use risk management. Manage your account wisely. It's your lifeline. It's your bloodline. Okay, if you're living off your forex income only, like, why are you going to be taking huge risk on your principal? Your capital. Okay, so be very careful, guys. If you guys, one advice I would give you guys, if you guys want to do a little bit more aggressive, just open up a separate account. Okay, and just throw in how much money you're going to throw in there. And then, be aggressive on that one and look for the good setups. But always, if you're going to be aggressive, you better wait for the perfect setup to go hard on, okay? I hope this video helped you guys. Go back through it if you're having issues with your stop loss and all that. Just make sure you use structure, use proper lot size, okay? This market's relentless, guys, so you got to protect yourself, all right? So, on to the next video, guys. Forever Blue. Peace.